Good morning, everybody, and welcome back to another episode of the Broker Breakdown with myself and James. And today we have some insight into, I think, a specific topic that there's a lot of confusion with on the property side of it. So, homes in general. And James, I know there's a couple of different talking points, but I'll kind of let you jump in first, just to kind of give people an overview of what they're going to expect today.
Yeah, so we have a few talking points on different kind of properties because we've been seeing a lot recently that people and consumers have been purchasing properties either to live in, to rent out, either as a short-term or long-term rental, possibly have vacant or be doing construction on it. And we've been getting a lot of questions as to, well, one, if I'm buying a house or a property or whatever it might be, shouldn't I just put insurance on it and that should be fine enough? And our obviously response to that is, well, no, there's different products and different coverage that you need based on what you're going to be doing with that property. So if you're going to be putting it on like AirBnB or Vrbo as a short-term rental, there are restrictions to that from the insurance side. If you're going to be doing it as a long-term rental where it's just a family that you might rent out to, that's a little bit of a different story. Going over to the vacant side of things, if it's going to be vacant, again, there's going to be some restrictions to it. And then kind of jumping into, at the end of the podcast here, doing some like high value kind of niche market homes where it might be a little bit hard to place depending on what's going on the property. I do see this very often in smaller towns where you have a home on some farming land, but then the person that owns the home and the land is renting out the farm to basically have someone else basically farm it for them. So that's a restriction as well. We'll get more in depth with each kind of topic, but I think the first one and like the easiest one is going to be to start off, Mike, with just rentals and kind of breaking down short-term versus long-term rentals.
Yeah. And you know what? Even before that, I wanted to just kind of mention, because it's a hot topic, and I think a lot of people in the last couple of years have purchased properties for, it could be a number of different reasons, but the idea of like getting into real estate, and either having it, as that vacant condo, for example, or having a property that's going to be rented out, but it's going to be 6 months later after I do, $100,000 in renos. These types of examples, James, have been coming up more and more often because there's kind of the societal push for people to get into real estate, but then not necessarily have a plan for the property, right? So it's, you could turn this into a legal duplex, and then a month later it's like, nah, you know what? I'm actually gonna, rent it out to students. And then, a few months later it's maybe I will live in it. So the occupancy of that property keeps changing. And that creates a ton of confusion because the actual way that a property is occupied is kind of, how that insurance policy relates to it, right? Like we just said, you could have a vacant property, you could have what commonly is known as like, your general home insurance policy for you as, living there as the resident. There's the student side. There's all these different sides.
And I completely forgot to mention the student rentals too. That's a whole different kind of topic as well.
Yeah. And this is where there's been confusion for, I think, a while, is that when you're closing on that transaction, the lawyer's going to say, we need a binder confirming coverages in order to proceed with the closing of the transaction. And of course, as being insurance brokers and, not on the mortgage side and not on the legal side, we don't necessarily know and can't advise on how things are done that way on the registration of properties and what the occupied use is, blah, blah, blah. But I guess my point was going to be that if you don't know how it's going to be occupied, your insurance shouldn't just be put on as like a home policy, because if something happens and they come in, they notice there's renovations or it's vacant or, it has got students and you said you're going to live there, all those things can be affected from a claim example.
Oh, 100%. If you're based, like And again, circumstances obviously do change. Like you might have a time where like, you know what, you bought your first home, you've lived in it for 5 years, and now you know what, I want to rent it out and I'm going to go live somewhere else, like buy something else, right? So you always want to make sure that you're updating and being as transparent as possible to your insurance, because at the end of the day, if you're paying for something, you might as well make sure that it's, if you ever need to use it, it's actually going to pay out properly.
Right. And this is part of the reason why this episode I think is so valuable to people, is because if you're talking to that like random family member or the friend or someone that just says, oh, get home insurance on it, but there's no further questions, there's no further, maybe you should ask about this or this or this. How many people, James, just put home insurance on a property and it's getting favorable rates, but that's not even remotely close to what's actually happening in that house?
Yep, exactly. Again, they see the insurance and they're like, okay, that's going to be good enough for what it is. But then, like I said, circumstances change and it's never updated. And then again, it could possibly put you at risk. Again, there is some responsibility, obviously, on the broker side to make sure that we're asking those questions. But at the end of the day, like if you have a client for like 10, 15 years and in maybe like 5 years into your relationship, they end up like, maybe even like, for example, as small as, you know what, we renovated the basement and put like a unit in the basement. That's a massive change too that you have to make to your insurance, because if you've added a unit into your basement, you've probably added a kitchen. So that is going to increase your rebuild cost, because that's a lot more like items in your home that you have to have, having 2 kitchens, but you're also having tenants down there as well. So
right.
Again, it is on the broker to obviously ask those questions forefront if you are basically setting up a new policy, but it's also on the client side as well down the road. If situations change, that should also be updated to the broker, because again, the broker is not going to, like, how are we ever going to know that if that kind of stuff happens, right? Like it's literally impossible. Like we will never know if, let's say, Mike, you go and renovate your basement and put a tenant down there. How would, like, and if I was your broker, how would I ever know that?
Yeah, and that's right. Well, for one, we're not going to, unless we do like maybe that annual review or semi-annually being, hey guys, has the occupancy changed? How's the property? Kind of have those open-ended questions. But what I was going to say too is that not from our side, but more from the client-facing side, there's, I think, a disconnect with how serious it is to misrepresent what your home is being used for, right? Because the reality is, if you have like a total loss or a fire claim, I'll use that as an example because those are the really catastrophic claims. If you have that fire claim, and maybe it doesn't happen so often, so people don't talk about it, but it happens every 25 years, right? So you're not worried about it. If someone's giving you a price, James, of like, let's say $1,000 for a home policy, just for talking points, and the property is actually vacant and renoed, and it should cost you $2,500 as a talking point. How many people are going to take the $1,000 policy over $2,500, not understanding that occupancy makes that much of a difference, right? I think this is the major reason why it's like, well, if I'm just going to get insurance and I can close my deal, why wouldn't I just go for the $1,000 a year price?
Yeah, it saves me money, right? Like, but again,
when you don't know the severity of it, because if no one's talked to you about it, and you're getting your advice from
online,
well, yeah, I don't
people that aren't experts. Again, I was talking to our call, like I was talking to Brittany the other day, and she was kind of talking to me about something like in regards to taxes, and I said to her, I was like, well, put this into perspective then. Do you go through an insurance broker to do insurance, right? Well, then why wouldn't you go through an accountant to do your taxes, right? Just take the load off yourself, take the stress off your shoulders, and put them on the shoulders of a trained professional. That's what we're here to do, right? But if you don't go to the trained professionals and you're just researching yourself, again, you can go on the internet, you might see 1,000 different kind of like topics and 1,000 different answers to a question, right? So I would say, again, if you're buying a home, you're going to go to a realtor. If you're putting a mortgage on that, you're going to go to a mortgage broker. If you are going to buy insurance, you should be going to an insurance broker and an insurance agent that can guide you through that process, instead of just guessing, going on the internet or asking friends that, again, might not be qualified or know enough to guide you in the right direction, and then possibly be guided down the wrong road. And then even worse, if a claim comes up, then you're like, oh, wow, I took I took advice from a friend or a family member or whoever it might be or someone online, and now they've guided me down the wrong road. And then look at what that could bring up, right? Then you have resentment to that person, and then it just becomes a whole just kind of downward spiral at that point.
Yeah. Well, and again, because of the fact that like insurance is the end of the transaction, right? And I know I've experienced this before where a client will kind of need that insurance to close it. So we'll kind of call up and say, hey, I need to get insurance on this place. It's under my name sort of thing. It's going to be a primary home. And that's kind of what's disclosed. And then, you get that binder letter from the lawyer saying, hey, it's actually a rental property. And, you just know at that point that it's been misrepresented, right? By someone just trying to get through the system in order to do it. And you're like, man, who's telling you to do this? Who's advising this is the proper way? So maybe I think there's sometimes a seriousness to insurance that people don't always consider because they're willing to, accept the risk that if something happens under the assumption that claims don't happen on homes, James, as well, right? Like injuries don't happen.
But we've seen so much happen the last little bit. Like look at, I know we talked about this a few episodes ago, but remember that whole big thing that was in like Niagara on the Lake where they had that big like industrial fire? It happened again in Hamilton earlier this week. Same thing, a big industrial fire that basically caused like hundreds of thousands of dollars of damage. We're not talking homes here, but like it's still it's still happening. How many times I see like on social media where there's like a small little house fire in Hamilton or whatever, or anywhere in Ontario, just in Hamilton because that's where I live. But I see it all the time. And again, like, it may not happen to you, but it is happening out there, and there is a risk to it possibly happening. And again, the last thing you want to know is from the insurance side, I put insurance on a home. I'm actually renting it out to someone, either long-term or short-term, whatever it might be. And there's a fire, but you only put home insurance on it as like you were the actual like occupant there. And the insurance company finds out and they go, oh, we're denying your claim because it was a rental property. It wasn't even you living there. Like we don't ever want to go down that road with clients.
No, and it's a big deal. So to jump right into it there, because I think that was a great little opening. The types of properties, and we did some episodes and some talking about this before. So I'll do the first one very quickly, but there is a difference between a rental property, James, and a student rental that I think people need to know about. Rentals, you're typically looking at, and it could be anywhere from a condo to a detached home to a semi, whatever type your property owns, really doesn't matter. But rentals are going to be more for one, maybe two, depending on the size of the property, kind of individual units that within it that are to professionals or families, wherever it is. It's your very classic rental property, where the big difference with student rentals, which has a lot more exposure, and we can go into this in a second, is that student rentals or kind of rooming boarding houses typically have like, an entire detached home that you have a bunch of bedrooms, but there's a lot of common spaces, a kitchen, living room, everything else that all those people in that student rental are living in.
Did you know that there's like, I've been out of school for, 5-6 years now. But when I went to school, like most of the time you would see like a max like 5, maybe 6 students in a house. But I've been seeing a lot recently that like there's parts, especially at McMaster, actually. This is a really bad thing about McMaster that I was unaware of until maybe a few years ago. There's student homes in and around the McMaster area that like have like 8 to 10 students in one house. How insane is that? Imagine living with 10 other people.
That's news to me. That is unless that home is like legitimately like 4,000 square feet and has, and
like, they were small little homes. That's what I don't understand is like they were. So again, this is obviously not legal, but what I think what a lot of people were doing is they were taking like sunrooms and basements and they were just literally just putting up walls for rooms. And that's kind of what a room was. And they were super small rooms, like maybe 2 bathrooms, maybe 3 bathrooms in the whole house. But they were like small little homes, but they were using every piece of square footage they possibly could for bedrooms, basically.
Right. Man, the thing about student rentals too, from my experience is that even the higher risk ones, they still have an occupancy limit, right? I've done quite a few where the companies want to know how many kids are typically living there for the year. And some are B4, some will be 5. I've done a few at 6, depending on the companies, but they want to know those things. I don't even know who you would reach out to if you had 10 in a detached home. I don't even know if that'd be possible.
Like I said, I don't think it's even legal to do that. People were just doing it because they were getting more money for each bedroom, realistically, right?
Right. Well, and the thing about student rentals is there's underwriting criteria to the insurance company that matters, right? How many floors, how many fire extinguishers, smoke detectors, are the windows in those basement rooms big enough for code?
That's a key point here. It might not be an insurance question, but again, it is definitely a building question, because any city that I know of that I went to either school with or knew people that went to school, you have to have like an access window in the basement units, because people need to get out if there's a fire. So just putting up random rooms and not having windows, that's definitely a no-no. But from the insurance standpoint too, if the insurance company finds out there's no windows, then they're probably going to say, well, you got to put a window in for at least that to be a legal unit.
Well, and the big thing with basements that don't have proper windows would be those fire escapes, right? So if there's a fire at the top of the stairs, have you given enough time for someone to get through a basement window, for example, to get out?
Exactly.
Which is big. So going back, the student rental side of things, so people know the reason, and this is usually the reason why price is so much higher. The reason that typical rentals and student rentals are different is that student rentals are focusing on a certain class of people. Obviously, kids going to college, university. There's a ton more exposure there for slip and fall injury claims, for one, because there's going to be all these kids around all the time that aren't necessarily as diligent as maybe an older individual might be. You're having, like James, we mentioned earlier, they're going to be kids having parties and whatnot. There's going to be friends over for different roommates at all different points of the day and whatnot. So the exposure from a liability claim, which is the big part of student rentals, is much higher than that of a couple in their, mid 20s or 30s. That's professionals going to work that, have the odd friend over, but it's not the same. It's not the same in and out exposure that a student rental is going to have.
Yeah. Parties obviously are, it's no secret that they're part of university and college life. But I think the biggest thing too is that the revolving door of tenants, right? You could have from semester to semester, someone might only rent a room for a semester and be done and leave. And then you have a whole new tenant, right? And again, even if you have 5 bedrooms, let's say they do that, every single student does that, which is very unlikely. Usually you rent the room for the whole year. But let's say that is possible. You're going to have 10 tenants in that house in 12 months, basically. So there's a big revolving door. There's a ton of people going in and out. And again, you don't even know. The owner of the property might not be local. They might be from out of town. So again, if there is something that goes on at the property from the owner's point of view, they might not be able to get there right away to save something. If there's a fire or a flood or anything. Because again, I'm not saying students are stupid, but I was a student at one point and I live with a lot of people. And I'm not saying the people that I live with were dumb or anything like that, but a lot of students, unfortunately, they just get thrown out to the world at 18 or 17 years old. And they're just go fend for yourself. But they're never taught how to do any of that stuff. Mike, when you were 17 or 18, did you know how to turn off your water at your house if there was a flood or anything like that? People don't get taught those kind of things.
I don't even think that at that point. I'm actually joking, but I was thinking back. I don't even know if I knew that you had to empty the dryer lint trap at that point.
Exactly, but people don't get taught that, right? So you go to university, you're oh, I'm free, I'm away from my parents, this is awesome, right? But you have to learn the life skills, right? But I don't think a lot of people are taught those life skills before they're just thrown out. And they're here, go to university. And again, when you go, I was lucky enough that I stayed back and I got that extra year of maturity under my belt. But a lot of people go at 17, 18 years old. But again, how mature are you and how much do you actually know at that age, right? So I just feel there's a lot of lot of things that can be taught. But again, like from an owner standpoint, like, are you really going to put the onus on the students living there to like basically be able to like do all that stuff on their own at that age? Probably not.
Well, and this is again another reason why student rentals are that much more exposure than regular rentals, right? Is that there's this entire aspect to it that's just not the same as like a homeowner. So there's just more exposure, and I guess that's why I wanted to point that out, because student rentals are a lot more money, but let's keep in mind that if you've arranged your home into that where it has 5 or 6 bedrooms and you're making whatever it is, let's just say like $3,000-$4,000 a month in income, that's just part of the expenses, James, of running a student rental property, right? You're taking on the reward of making more money for what that home is worth from a single rental perspective. You have to take on that extra exposure and realize that's just part of the expenses of that as well.
I think the biggest thing is your liability is the biggest thing that's basically increased on student rentals, but also there's coverages that are different as well. Like you have to have that income replacement. And again, that might not cost you a lot, but it's still an additional cost you wouldn't have on a regular home, right? There's no income replacement on a regular home because you're not renting it out. There is no income coming from it, right? So yes, they might be more expensive, but at the end of the day, you want to make sure your property is covered the right way in the event of something actually happening. Because last thing we want to do is call a client and go, "Hey, John, sorry about this, but we found out your property was actually a student rental, and we can't. The insurance company is denying a claim because we thought it was owner occupied." Never want to have those conversations.
Which, as much as that's very serious, the reality is, if you ever had a home that was doing for student rentals, a claim would be denied almost 100%. And I say that as from a broker standpoint, not an adjuster, but that would be probably their standpoint. And or maybe they would cover a claim depending on the severity, but cancel the policy for misrepresentation, which goes against your home record in a terrible way. Best of luck getting a favorable quote for the next couple of years with that.
Exactly. Let's move on to short-term rentals now. And again, this has become a very, very popular topic with a lot of people not really deciding to travel outside of the country, but maybe travel within inside of Canada or even within inside of Ontario. And again, I know we talked about this a few weeks ago with apps like Uber and Lyft and Turo now, but there's kind of the flip side on the property side where you have apps like Airbnb and Vrbo, where you instead of renting like a hotel, you can basically rent properties from people for a night, for a week, whatever it might be. And again, Mike, there are differences when it comes to short-term rentals that we want to talk about.
Yeah, I mean, I would just highlight that the short-term rental aspect, you have different people coming in quite often, because it could be a daily, it could be a weekly, it could be monthly, whatever that rental looks like. And if you're using different websites, and we'll use Airbnb as a talking point, because that's one that a lot of companies are okay with. I will say that not all websites are insured or affiliated by insurance companies. So there are lots of websites, as the short-term thing becomes more and more popular, James, that haven't been okayed by all companies, or they'll only use short-term rentals if it's through a specific website.
Yeah, like Vrbo is the biggest. Like I would say Vrbo is probably the second biggest other than Airbnb, but a lot of companies still don't recognize Vrbo as being like a trusted source yet. So you do see some kickback if you ever want to do Vrbo on the short-term rental side. But again, from the short-term rental, kind of just like student rentals, a lot of in and out. Like again, you don't have a tenant agreement. It's just basically in and out. It might be, like I said, weekly, daily, monthly. Like I said, usually most people are about 3 to 4 days. So like you have a lot of turnaround. And again, the income replacement, I've seen Airbnbs and Vrbos. Like again, I'm talking more like luxury properties where they're bringing in like almost $200,000, $300,000 a year in income just from one property. So again, to have that income replacement coverage on there, you want to make sure that if this home or property is damaged in any sort of way, you want to make sure that you're not just losing money on this because it's vacant and being reconstructed. You want to make sure that you're at least getting some sort of income from this, right? So again, a coverage that you definitely need to have that's not on a typical home policy.
And there's aspects too. So there's the pricing side, which is always, the more exposure the more price you're going to pay per month on the insurance, which is what the client really cares about. From our side as a broker, there's an underwriting component to the policy as well, which is, what are the different exposures that a student rental versus like a short-term rental have, right? For like Airbnb, for example. And there are other questions, right? There's usually, James, with short-term rentals, you're looking at, if you're going through a website and you're using it for people visiting the area for tourism, as an example, there's going to be questions like, how is the maintenance and cleaning done between guests? What do they have access to, right, within the house? Are there locked rooms, or is it
thermostat's a big one too? Like if they have access to that and they can change the temperature in the home, I know that's a big issue insurance companies have.
Now, I mean, more or less, that's you're as a homeowner, you're not going to want them to have it up to like 75 the whole time when you're there, for example.
Not like the office. I went in the office the other day, kind of a side note here, and I look at the thermostat and it's like 25 degrees. I'm like, wow. Like, I might as well take all my clothes off and have a sauna in here. Like, don't you find it hot in the office?
It is in the main room, but out by the windows where I'm at, those big bay windows, the cold comes right through those.
Really interesting.
It's a different, man, trust me, it's a different space over there.
Yeah, I just find it so hot in there. Like, I had to if I ever wear a sweater, I'm taking it off instantly because I'm just like, whoa, 25 degrees? That's way too hot. But
yeah, totally.
Yeah, anyways, getting back into it, yeah, there are restrictions, and you want to make sure that you are following those guidelines. And again, not every company, a great note is not every company is going to take short-term rentals. Like there's some companies that they say, we don't have the product for this, or we don't want to take this on. And again, that's the reason why you work with a broker, to make sure they can find you the best solution for a short-term rental. Again, there are gains to it. You're obviously making money from it. And like I was saying earlier, I've seen properties, and I have clients that have properties that are $200,000-$300,000 in income on one property. Again, probably a luxury cottage where it's on the water. It's big. It can like home up to like 12, 15 people. But again, you want to make sure that in the event of something happening, you want to make sure that there's coverage and proper coverage, because you never want to hear, oh, I don't have the right coverage for this, and now it's not being paid out, and now my income property is now basically useless and I'm not making money off it. Because at the end of the day, that's what you bought the property for, is to make money off of it.
Yeah. And I mean, on that short-term rental thing, because not all insurance companies will do it, like you're not going to get the same quote back from 20 different providers. Speaking with your representative ahead of time is so important, because if let's say you're buying it to close, you don't want to say the day before closing, hey, I need insurance on this short-term rental, because now you're under that bind, James, right? Like there's, at that point, maybe you're only getting one or two options, because it's just, this is what is now a requirement for closing. Like you haven't done enough of that due diligence to give the proper time, or even, for example, if someone is looking at purchasing a property but wants to think about different occupancies ahead of time. One of the reasons you want to have that relationship with your representative, whoever they work for, is that hopefully we can discuss some of the concerns. We can discuss what the pricing differences might be between different occupancies of that property, as well as, what's the long-term game? What are we looking at? How many markets can I reach out to in time for you now, right? There's all of these aspects that aren't as simple as like your standard home and auto insurance that you can shop multiple companies in 5 minutes and get, the exact same coverages. The reality is these kind of niche products we're talking about today, they require more attention. They require more insight into what actually is happening, and more of a longer term plan. It's not just about giving an address and saying, get me the best rate. Like this is a different conversation.
Exactly. And again, if I say this to all my clients, if you're very rate based, then you're probably not going to be the client for me. Obviously, like our job is obviously to get the best rate and coverage for people. But at the end of the day, I want to make sure things are done properly. And unfortunately, like in any industry, properly is not always what's done. And it's an unfortunate thing, because at the end of the day, it's only putting the client at risk, and unfortunately putting you at risk too, because your license can be under scrutiny as well if you're doing things that aren't legal or might be a little bit in the gray area. But again, I want to do things, and I know Mike does the same way. We want to make sure that our clients are taken care of properly. And at the end of the day, they can call us with zero stress and zero doubt in their mind that, you know what, yeah, I might have a fire at my house, but you know what, James and Mike, they covered it properly. So I don't have to worry about anything being in this gray area or ever have to question, oh, this might not be paid out because they did this incorrectly.
The one of the other niche products, James, that I wanted us to get into on the episode today was, and I know we've discussed this very briefly in a previous episode, so I won't spend a lot of time, but if the intention is to purchase a property, to have it as a vacant property, to do either renos or maybe get tenants in, but it takes 6 months, for example, again, you cannot insure that as a home policy until it's rented out, like as an actual rental, for example, or if you're doing renos and then moving in, it's got to be insured as a vacant property. And then when you've completed renos or when you've got tenants in, we can properly address that and change it over to the correct occupancy. And I think vacant properties specifically have, you typically pay more for insurance. So in my experience as well, I've definitely had conversations with potential clients that have gone elsewhere saying, hey, Mike, I got a quote of $800 for this. I'm at like $1,500, but because I know for a fact it's being insured as, you know, an occupied dwelling versus the vacant one for 6 months, James. So vacant properties, I wanted to quickly point out some of the risks so that you guys, you know, you as viewers and listeners know, vacant properties in particular are going to have risks where no one's living there. So there's obviously water concerns, there's fire and theft concerns if it's not being looked at. Lots of people could even own it and maybe not even go to the property, James, for 30 days. And then it's, oh my goodness, I have damage in this place that I didn't know about. Or there was a theft claim. You know, there's these other exposures to vacant properties.
Yeah, well, I'll touch a little bit on this quickly so we can kind of get into our last point. But yeah, vacant properties, there are a lot of restrictions to it and a lot of like conditions you have to make. Like there has to be someone that goes to the property. And again, this is going to be company based, but there's companies where they're like, okay, we need someone there like every 3 days, every 7 days or whatever, checking up on the property. Or there might have to be cameras, any kind of like security system. Because again, a vacant property is definitely going to be at a higher risk of theft because people can see that. There's people not coming in and out of that property all the time. So this is an easy kind of boom. Like we can go in there and possibly break in and steal stuff if there's anything in there, right? So there are conditions if you are going to do a vacant property policy with an insurance company. Again, what those conditions are going to be based on what that insurance company will even allow, if they even will do a vacant property. But again, make sure that if you are going to buy a property and are going to renovate it maybe for 6 or 12 months, and there's no one going to be there, you definitely want to make sure you have the right product because you don't want to be insuring it as a home until there's actually tenants, or if you're the occupant going to be there after, then great. But you want to make sure there's actually someone living in that property before you just throw insurance on it and just hope that if anything happens, it's covered.
Yeah, it's a big thing. And I didn't want to take too much time because I know we want to get into kind of the high value and harder to place stuff as well.
Yes, which I know you've had recently, actually. So I know this is kind of where this episode's really developed, is that you recently had it. And I've had a few in the last little bit as well, but I know you've recently had it, I think, in the last week or two. But let's start more on, because I think the high value side is a little bit easier to kind of explain, and a little bit less in depth we have to go into. But yeah, like, what do we see on the high value home? Like what kind of, like, what describes a high value home? And this is going to be insurance company differing as well.
Yeah, it's specific, right? I think as a general rule of thumb, standard insurance companies, there is usually kind of a general limit. And I know, James, with 5 or 6 specifically that we work with, anything over the $1 million replacement cost is kind of, in their opinion, more of that VIP high value. For the sake of this episode, I guess we'll look at, there are other high value companies that kind of specialize on those VIP clients, but the homes are more in the area of like the $2 million mark. sort of thing. And they have different products available for them, right? So you're talking about someone that, the whole client themselves is different. They're going to have maybe jewelry or arts, they're going to have a higher replacement cost in their home. And with those comes other things as well that typically insurance companies look for.
Yeah. And like you kind of pointed, like usually the mainstream markets, what we call the normal market, will usually have rules. Some are $1 million, some are 1.5. I've even some even going up to 2. Usually once you get past that 2 mark, you're usually going to be in a high value regardless. And then we'll have to go to a company that will actually take on high value homes. And like I said,
so we have underwriting, right? To
yeah.
One thing people don't always realize is just because you've purchased the home for a certain thing, the actual rebuild cost is going to be different.
That is literally what I was about to say. And that's a question, or that's a statement we've made in a lot of episodes. Just because you've purchased a home for, let's say, $5 million, that's not what the actual property is going to cost to rebuild. Rebuild and retail value are very, very different. So yes, you might buy the property for $5 million, but when we do our, when we go into our system and actually use our tool to basically get the evaluator and how much it would cost to rebuild, that property probably is only going to come up as a maybe $2.5 million rebuild, because again, land is what costs most of the money in a real estate exchange. So make sure you're keeping that in mind, that yes, you paid $5 million for it, or let's just use $5 million as an even number. But on the insurance side, we're only covering possibly $2, maybe $3 million for the rebuild of the actual building of what that would cost.
Yeah, exactly. So the higher value ones, and I know it's only a small portion, but just for those clients that are interested or do want to know for their own peace of mind, it's just regular insurance companies don't have a product for that. You're typically going to someone that's a little more specialized, but I think that's almost a given, James, for people that are in that category anyways.
So go ahead.
Because I was just going to say, because anyone that has, a higher value home is looked at as more of a VIP client anyways with respect to
if you have a higher value home, you're probably going to have higher, the generalization is you're probably going to have higher value items in that home. You're probably going to have a little bit better kitchen. You're probably going to have better contents inside, like clothing, furniture, appliances, that kind of stuff, right? No one's buying a $5 million home and going to IKEA and furnishing it with IKEA. It's just not happening. So, but yeah, kind of moving on to our last point we want to make here. And Mike, this is one that you've really had recently with a client, but hard to place homes and why some homes might be hard to place in the market.
Yeah, so hard to place homes is more or less just a term or a category that insurance companies use when there's a couple of different things that most insurance companies, the standard ones, don't want. So for example, unfortunately, if clients have non-payments on homes, or maybe they've had multiple claims and standard companies won't take them, things as maybe older, and this is, older updates, James. So if you've had a really, really old home that hasn't been updated, so it's got those concerning plumbing, or wiring, or maybe a roof exclusion, all of these combination of things, and some of these homes unfortunately have all of these things combined, you're looking at a hard to place category. And all that really means is you're going to pay more money for that insurance policy, given the fact that all insurance companies do not have an appetite or a product for that. If there's a couple of things that don't fit into the mold, it's going to go into this harder to place category. So you're typically going to see slightly higher premiums. And the reality is that is just what it costs, because the exposure to that policy of having a claim is higher, right? Whether, James, it's updates to the homes that have a higher exposure for a claim loss, or the non-payment side, right? Which very clearly would state that maybe they're going to, non-pay a future home policy, right? So maybe there's payment options. That whole category is very niche as well, because it's dealing with a certain type of clientele, obviously.
Yeah. And I think another one that would be a very big thing for hard to place homeowners is multiple mortgages. And I know we talked about this recently as well, is that once you kind of get past that 2 mortgage level, that's usually going to be put in the hard to place homeowner. and not very, and like I said earlier on in the episode, a lot of more in smaller towns is where you have a big land, like big property, and you might have a home on it, but you know what, like you don't want to, maybe you're at the age where you kind of giving up the land, or you at least want to give it to someone and have it rented out. You rent it out to a farmer and they farm it for you or for themselves. Again, a lot of insurance companies will place that into a hard to place homeowners because the property that you own that we're insuring is now being rented out for the use of like basically income. So that also would kind of land into the hard to place homeowner. I think one that you recently had too was if a home is owned in a company name. Again, that is very hard to place because that's very uncommon to have. I'm not saying it's unlikely, but it's uncommon. So a lot of main market companies don't like that. So that usually will also get placed into the hard to place homeowners category as well.
There is, and just speaking on that too, because I know there's been a couple of different examples, and actually as you talk about them, more and more come up, which is kind of what happens from experience. Some of those harder to place too, they could be, specific types, right? So it could be the fact that like maybe it's not in a hydrant protected area and it's only a fire hall and it's over a certain kilometer range away, right? It could be a beautiful home, but if you're in this unprotected category, again, it's outside of that kind of box, James, of like your standard home policy. It might be harder to place solely for the fact that, that fire hall is like 15 kilometers away, for example, too. So on top of what you said, if you have any combination of those things, the mortgages, the claims, the non-payments, farming operations, or any combination of those.
Even other business operations too. It doesn't have to be farming, but like if there's any kind of business operations on that property, most insurance companies are gonna be like, no, we can't insure that. That's way too much of a risk. And but I'm just using farming because farming is just. I have friends and even clients that do the same thing where they own a big piece of land and they basically just want to live in the house, but they're like, oh, well, I'm not going to waste all this land. Like let a farmer rent it and use it. Right. So.
Yeah, that's right. And you know what? I think it should be expected that if you have, acreage, for example, and you're going to be renting it out to like maybe a neighbor farmer for cash crop or whatever it might be, even just being maintained, you're still responsible, James, for that land. And I don't think that people always understand that. Like, if you have more land and somebody comes on your land and then breaks their ankle and tries to sue you for saying that your property was not being maintained, I mean, there's a possibility that you're going to be held accountable for that, right? So having acreage is super nice. Don't get me wrong. I don't think that should be a deterring factor at all. But you have to just assume that responsibility is now on yourself. So if somebody else is coming on there and taking care of or managing that land for you, which is very common with people that want that kind of situation, you have more exposure. Your insurance is probably going to be more, but just keep in mind that that was something that you took on yourself, right? By purchasing 50 acres of land.
Exactly. And again, like you want to make sure that is covered properly. At the end of the day, like it's a very, very niche market, and that's why we call it a niche market, is because not like there's a very, very small percentage of clients that have this kind of stuff, but we want to make sure that small percentage of clients that might have these kind of risks know and are open to understanding that, you don't fit the mold of what the general population of they just buy a home or a condo or a townhouse or whatever it might be, and they can just get regular insurance. Well, no, there's not. Every person's situation doesn't fit into that mold. So if you're not fitting into this mold, we want to make sure that let's mold something that actually fits your situation.
Well, that was part of this episode, right? Was just making sure that we bring a little bit of transparency to an area of purchasing a property for people that are doing it for investment purposes or doing it for down the road, that the actual occupancy and what your property is used for is a large driving factor in not only price, but who you get it from and what coverages are offered. I mean, that's arguably probably the first question that should be asked with that property is what is the occupancy used for? And then from there, it creates a plan, James, for where you should be looking and what we're doing as brokers
exactly
on your side.
If it's not one of the I would say it's probably the first 5 questions. Obviously, getting some general information like who's it owned by, like address, date of birth, all that stuff. But it's definitely in my top 5 questions I ask. Okay, well now, like, what is the occupancy of the home? Like, are you living there? Are you planning to rent it out? Is it going to be vacant? Like, how is the occupancy going to be? And then you kind of go from there and build your questions around how the occupancy is going to be. Because based on that, there's going to be different questions based on how it's going to be occupied realistically.
And the reason why this comes to light right now as a super, super important topic is I know from experience talking with potential clients that maybe I've lost business from or that I've gone some elsewhere, by going through that situation, James, and talking about, getting all the information, getting a quote, going back to them and saying, hey, it's going to cost you $2,000 for that vacant property for the year. And they're like, whoa, Mike, I got a quote from the guy on the road at $900. That doesn't give me anything to go off of because I have no idea what you've provided to that person.
Yeah, we don't see what you're being quoted, right? And that's what I always find is one of the toughest things. Especially, I cannot stand when people call and do quotes, and then they go, well, I already got a quote with, let's say, Aviva. But we work with Aviva, and we know that that's not Aviva's price. But, like, what are you going to tell a client? Like, you're wrong? Like, it's like you have to really tiptoe around that, right? And it's like, well, who'd you go to get that quote? And, like, what information did you disclose to them? Or, like, what did they do on their end to get you that price? Because at the end of the day, that's my biggest pet peeve is, like, when we have a market like that and we know that's not the price, for the clients, like, so insistent that, like, they've gotten a price from that company, but we know that, like, that's virtually impossible.
Well, yeah, and people have probably been in the situation before where, at that point, again, yeah, you're trying to tiptoe around it because you really, technically speaking, if it's through brokers and the same information has been exchanged, the price should be almost identical, right? I understand there might be little differences possibly, but if it's all identical, the rate that I'm getting should be the same as the other guy in that case. So it's always funny, James, as you say that, because at that point, without even really knowing, I can tell you that we're comparing apples and watermelons at that point. You know what I mean? Like, we're not even in the same ballpark. I'm not even going to say apples and oranges. We are so far apart with respect to, like, what is actually being either disclosed or misrepresented. And I say one of those two things because you could call somebody and tell them the wrong info, get a price you don't like, and call another person and then just tell us things that you want that you want to hear, right? Which is so detrimental to our industry.
And like I said, it's the responsibility of both the broker or agent and the client. Because at the end of the day, if the broker is making mistakes and doing stuff they shouldn't be doing, well, that's not right. But if also on the client, if they're doing the same thing, they're basically just misrepresenting themselves, but it can also hurt the broker as well. But again, both sides can hurt each other. If the broker's doing something wrong, it could possibly hurt the client and themselves because, again, if they get found out that they're doing something wrong, that hurts their licensing standpoint and hurts the client potentially in a claim. Again, on the other side, the client misrepresenting, again, claims not getting paid out, and then it looks bad on the broker because then the broker looks like they didn't ask the right questions and aren't doing their job properly. So
Right.
Just do things properly. Just get things insured properly. And at the end of the day, like I said, you can go to sleep knowing that these things are done and will never have an issue if you need to make a claim on your home because it was done properly the first time.
Yeah, that's right. That's the big thing. That's a huge thing.
But I think that kind of wraps up for today, Mike. We do have a guest coming on for... what would that be? Let me just check the date there. So we'll be recording with him on April 12th, but his episode will actually come out the 18th of April. So his name's Aleem. He's a real estate agent out in Toronto. So we haven't had a real estate agent yet, actually. We've had mortgage brokers. Not. So that will be kind of nice to get it kind of a different point of view on the show. So I'm really excited about that. So yeah, tune into that because I'm really, really excited to have him on and kind of give his opinions and viewpoints on some stuff that's kind of going on in the market.
Yeah, that'll be great, especially because it'll help bring things full circle the way it always does for us. So that's going to be exciting.
Exactly. I cannot wait for that. But like always, Episodes go out every Tuesday at 12 p.m. Eastern Standard Time. So if you guys haven't already, make sure you follow and subscribe on any streaming sites that you guys watch us, so you guys don't miss any of the episodes that come out every week. And again, we really appreciate it. His episode will actually be episode 15 already of this season. Can you believe that?
Yeah, it's we're starting to make some pretty serious traction.
We are. And I'm really enjoying doing it and giving the education, the knowledge out to our listeners. So I'm just, again, once we can get that like third voice on, these episodes are great, but once you get that third voice, I just find it really just like amplifies that episode even more. Right. Yeah, I totally agree. But again, thank you guys for tuning in this week, and we'll check you guys next week on the Broker Breakdown.